Oh, okay, I'm go ahead and start the recording for the meeting. Once again, my name is Matt Brotherton. I am the communication strategist for the Department of Revenue, and I will be here to assist anyone with technical issues they may be having with Zoom today. Also, I will be tracking questions in the chat for Rachel and Adam, who will answer all of the questions at the end of the presentation. This meeting is being recorded, and there will be a copy of the presentation in PDF format available to you. I'll make sure you have those links towards the end of the presentation today also. Your presenters today are Rachel Milne and Adam Seacrest, who are income tax specialists, and I'm going to hand you over to them because they are the ones who know what they're talking about today.
All right, thanks, Matt. Like Matt said, my name is Rachel Milne. I'm a tax specialist with the Department of Revenue. With me, I have Adam Seacrest. He's also a tax specialist. So thanks for joining us today for this webinar. We're going to be going over our 2022 tax updates, and these will focus on our 2022 tax year, as well as the 2023 filing season. Our agenda today, I'm going to cover the 2022 legislative updates, and Adam is going to touch on our annual and forms updates. And then we'll also share some department news from the past year with you as well. So our 2022 legislative updates, there were quite a bit of changes that went into effect from 2021's legislature that are now in place beginning with tax year 2022. Our first update. The first update is the top marginal tax rate that decreased from 6.9% to 6.75%. Secondly, the elderly homeowner renter credit has increased. So Montanans over the age of 62 who paid rent or property tax and had $45,000 or less of gross household income may be eligible for a tax credit of up to $1,150. This is a $150 increase from the previous law. Additionally, the amount of exclusion from gross household income to determine the credit has increased. So taxpayers will get a $12,600 exclusion from the gross household income as opposed to the $6,300 exclusion that was in effect before 2022. And this just means that taxpayers who qualify for the tax credit will get a bigger credit because less of their household income is considered in the calculation. Moving on, the Innovative Educational Program, IEC, and the Student Scholarship Organization, SSO, tax credits saw a very large increase in 2022. As a refresher, these non-refundable credits are available to taxpayers that make donations for educational purposes. The IEC credit is for taxpayers who donate to a public school district, and the SSO credit is for taxpayers that donate to SSOs for the purposes of giving scholarships to K-12 students to go to private schools. In 2022, the credit increased to the amount of the donation up to $200,000. Previously, the credit was equal to the donation up to $150. The credit still isn't refundable, but under the new law, it can be carried forward for up to 3 years. A taxpayer must be pre-approved to take the credit, and this is because each credit is capped. The cap for 2022 for both of the credits was $1 million each, meaning there was $1 million of each of the tax credits available for all Montana taxpayers to take. Both of the credits met their caps very early in 2020, and donations for the credit can no longer be accepted. The cap for the public school districts was exhausted in less than 6 minutes of the opening of our education donation portal. And then the SSO credit was exhausted in about 2 weeks. Pre-approval for the credit is done on our education donation portal. And to obtain pre-approval, the taxpayer has to make a donation to the SSO or public school district. And then the SSO or public school district will report that donor's name and the amount of donation on the education donation portal. And then if there's enough credit available, the taxpayer will be pre-approved for credit and receive a credit certificate. The portal also includes the real-time amount of tax credits available, the contact information for the public school districts, information about SSOs registered in the state, how much money each SSO received in donations that were eligible for the credit, and which private schools received scholarship money from SSOs that received money from the credit. So for tax year 2023, the cap increases to $2 million. And in subsequent years, if 80% of the credit cap is met, the cap will increase by 20%. If you or one of your clients are interested in receiving the credit for tax year 23, here are some takeaways for you. SSOs and public school districts can begin accepting donations for the tax credits on January 1st, 2023. Be aware that the credit is available on a first come, first served basis. And we are anticipating that the 2023 credits cap of $2 million will be exhausted quickly, just like it was this last year. So make sure to donate early in 2023 so that the SSO or the public school district can record the donation for pre-approval once the portal opens on January 18, 2023. And just so you know, in the PowerPoint presentation that Matt linked to in the chat, there are links throughout the presentation, and there's a link to the donation portal for you to go out and look at and check out if you're interested in it. All right, the next update for tax year 22 is this new tax credit called the Jobs Growth Incentive Tax Credit. This credit's available to employers that create qualifying net employee growth. The Montana Department of Labor and Industry determine if an employer qualifies for the credit. The employer must apply to that agency to claim the credit, and there are several benchmarks an employer must meet in order to claim the credit. So in an effort not to get too technical, I encourage you to visit their website to learn more about the qualifications. And I've included a link to that, the DLI's webpage on this slide. DLI has developed an online application, and employers can begin applying for the credit now. So once approved for the credit, DLI will send the taxpayer a certificate with the amount of credit that they've been approved for and its associated reference number to be used when claiming the credit on the taxpayer's tax return. The credit is equal to half of the FICA taxes for employees used to create the qualifying net employee growth. It is non-refundable, but it can be carried over for up to 10 years. The credit's only available from tax years 2022 to 2028, and taxpayers can claim it for all 7 years if they meet the eligibility requirements, and DLI approves them to claim it for each of those years. We developed Form JGI for taxpayers to report the credit on their tax return and track the carryover amount from year to year. And finally, under the income tax simplification bill passed in 2021, 2023 is the last year that contributions to the farm and ranch risk management accounts, first-time homebuyer accounts, and Montana medical care savings accounts are eligible for deduction from Montana AGI. Deductions for the amount of contributions to these accounts were repealed beginning with tax year 2024. However, taxpayers will still be able to exclude interest earned on the first-time homebuyer account and MSA account on contributions made before January 1st, 2024. For the farm and ranch risk management account, contributions to these accounts cannot be made after January 1 of 2024, and any funds in the accounts must be distributed before or by tax year 2027. And then finally, we just wanted to remind you that these 15 tax credits were repealed beginning in tax year 2022 as a result of the income tax simplification bill. So 2021 was the last year any of these credits could be claimed. Credits with carryover provisions can still be carried over until the carryover is exhausted or the carryover period ends. So for example, the adoption credit had a 5-year carry forward provision. So if a taxpayer claimed the tax credit in the adoption credit in 2021, they'll have until 2026 to use any to claim any unused credit. With that, I'm going to go ahead and turn it over to Adam so he can talk to you about our forms, our annual updates and forms changes.
Thanks, Rachel. As she said, I will be covering our annual changes and our forms updates for tax year 2022. The forms we'll be covering are the Form 2, the Form FID 3, and the Form PTE. But before getting into the changes we've made to these forms for the upcoming filing season, let's go over a few annual administrative updates and changes. We'll begin with the due dates for the 2022 tax returns and the 2023 estimated payments. Pass-through entity returns had the same due dates as always. March 15th as the original due date, and then September 15th as the extended due date. For individuals, estates, and trusts, the original due date is going to be April 18th this coming year. This is because we follow the federal due date, and in 2023, it's being extended to the 18th of April because of Emancipation Day, which is a Washington, D.C. holiday recognized by the IRS and then observed on Monday, April 17th, 2023. So therefore, the extended due dates for the Form 2 and Form 3 will be October 16th. And please note that the estimated payment due dates with the first quarter payments are going to be April 18th, also because of Emancipation Day. And then the fourth quarter payment due date, October 16th, because the 15th falls on a Sunday. Okay, and then each year our tax filing thresholds, deductions, exemptions are adjusted for inflation by our staff economists. Most years this is a modest increase. However, as you can imagine, this year's and the next year's inflation adjustments is a little bigger than normal. The adjustment is based on the Consumer Price Index as of June of the preceding year. So for tax year 2022, that means June of 2021. We will show you the 2023 numbers as well, which are based on the June 2022 CPI. So for 2022, each income margin has been adjusted. So the only tax rate that changed is the decreased top marginal rate, which Rachel mentioned earlier. And now that it's at 6.75%, it phases in at a taxable income above $19,800, which is an increase of $1,000 from the 2021 level when that phased in at $18,800. And then the deductions, exemptions, and subtractions for tax year 2022 have also been adjusted for inflation. Maximum standard deduction increased from $4,830 for a single filer in 2021 to just over $5,000 at $5,090 in 2022. And the married filing joint head of household filer maximum deduction was $9,660 last year, but it increased to $10,180 this year. The personal exemption also increased this year to $2,710 after being $2,580 in 2021. And the partial pension exemptions maximum subtraction went up to $4,640 this year, where it was $4,400 last year. And then the phase out for that partial pension exemption begins at $38,660 this year. Last year was at $36,700. And then what's arguably the most notable change on this slide is that the MSA contribution limit has increased by $500 for 2022 to a total of $4,500. And then before moving on to the filing requirements, let's take a quick peek at the 2023 tax rates, so all you planners can get a jump on things for the next year. In 2023, the 1% marginal rate will apply to taxable income up to $3,600, and that 6.75% rate will kick in at the $21,600 level. So as for the 2023 deductions, exemptions, and subtractions, they're also getting some major adjustments. Standard deduction ranging from a low of $2,460 for single filers to a high of $11,080 for married filing joint and head of household filers. The 2023 personal exemption will go up to $2,960, and the partial pension exemption will be adjusted too, with the phase out starting at $42,140. The MSA MAC contribution will stay at $4,500 for tax year 2023. Let's jump back to 2022 now and look at our Montana filing requirement thresholds for this year. We still have all 6 of our filing statuses, with the age determining which specific filing threshold applies to the taxpayer. Those 65 or older have a higher threshold no matter which filing status, and single and married filing separately filers have the same requirements: $5,090 if under age 65 and $7,800 for 65 and over. Head of household filers and married filing jointly taxpayers have the same thresholds, unless both spouses are over age 65, in which case that threshold goes up to $15,600. Please keep in mind that all this information is available on the slides that we have a link for in the chat, as well as on our website at mtrevenue.gov. And the last items I'm going to point out before talking about our forms changes are the interest rates in 2023. As with the deductions and exemptions, our interest rates also are adjusted on an annual basis. The 2023 rate for individuals, estates and trusts, and pass-through entities is 5%. Our state statute dictates that this rate is the same rate as determined by the IRS for underpayment of taxes as of the third quarter of the preceding year. All other tax types, including withholding, corporation, lodging, etc., those are subject to a 9.25% interest rate in 2023, and that rate is based on the preceding year's end of third quarter prime rate. So that was September 30th, 2022 that rate's based on. And these rates apply to any unpaid balances as well as refunds. Moving on, let's go into our forms changes for 2022, starting with our Form 2. The first change is fittingly found on page 1. We created a military spouse checkbox. This box is to be checked by spouses of military service members if they are considered non-Montana residents under the Military Spouse Relief Act, and if they have Montana source income along with Montana wages. This is also for military spouses who are filing to receive a refund of their withholding. Then on page 2, we've added the options for taxpayers to deposit their refund or a portion of it into a 529 and or a 529A account, also called an ABLE account. This direct deposit option is legislatively required to be included on the return. Previously, this was its own schedule found on page 12 of the form, but we moved it to page 2 in the direct deposit section for a couple of reasons. First, to eliminate an extra page on the return and thus save paper for those of you who print out your Form 2. And it's also a way to make this option more visible to taxpayers who may not have been aware that they can deposit a portion of their refund into a 529 or an ABLE account. On the addition schedule found on page 4, we changed line 10, which was previously used by taxpayers to add back expenses related to taking the dependent care assistance credit. This is one of the credits that was repealed as of 2022. So we repurposed this line for any business claiming a Montana tax credit to add back those expenses used to claim that Montana tax credit. Examples of credits that should have add backs on this line include the media credit, the jobs growth incentive credit, and the trades education and training credit, just to name a few. On the subtraction schedule, old line 30 was removed because it was for a subtraction which was repealed as of this year. So all the subsequent lines after it have been moved up. We then added a separate line for taxpayers who have Tier 1 railroad retirement benefits to subtract these benefits from their Montana AGI. Previously, they reported these amounts on the same line as the subtraction for the Social Security benefits. The non-refundable credit schedule was redesigned to account for all the repealed tax credits that Rachel showed you earlier, as well as to provide space for reporting additional credit information. First, there are a few credits that require department approval prior to being claimed, including the IEC, SSO, and media credits reported on lines 8, 9, and 13, respectively. The department issues approved taxpayers an authorization number to claim these credits. So we've included authorization number boxes underneath the corresponding credit line where taxpayers can enter those codes. We also added a line for the new jobs growth incentive credit on line 14, which Rachel taught about previously. And finally, we created lines 15A through 15C for taxpayers to report the amount of any repealed credit they are carrying over from a prior tax period. The taxpayer will identify the credit using its corresponding code, which will be found in the Form 2 instructions. And the last change we made to the 2022 Form 2 is on the other payments schedule, where we added 2 lines. The first new line, line 4, is for loan out withholding. For those of you who don't know, loan out withholding is paid by a film production company to a loan out company. Loan out companies are personal service companies that may be owned, for example, by an actor that receives payments for services performed in a production. So the production company withholds 6.9% of the amount paid to the loan out company, and the owner of that loan out company can then claim that withholding as a credit against their Montana income tax. This loan out withholding is a requirement for production companies claiming the media credit. And then the second new line here, line 8, was added for taxpayers who are amending their 2022 return and made a payment when they filed their original return. Next, we'll discuss the changes we made to the 2022 Form FIT3. The only substantive changes we made to this form are found on page 2. We wanted taxpayers to be able to clearly report the types of payments being made either throughout the tax year or with the return itself. Beginning with line 40, we dedicated this line solely to estimated tax payments made throughout 2022. We then added line 41 to break out any amount being applied from the prior year's overpayment. We also added lines 42 through 44. Line 42 is for estates and trusts to report any other payments which may have been made for the tax year. And then lines 43 and 44 are dedicated to amended returns, so that taxpayers can report either payments made or refunds received with the original 22 tax filing. And then moving on to the Form PTE changes for tax year 2022. On page 1, we added lines 4A and 4B so that pass-through entities can separately report the amounts of guaranteed payments made to partners for either services performed or capital contributed. This change makes page 1 of the Form PTE more closely resemble Schedule K of the Federal Form 1065. Further down on page 1, we added a second Schedule 1 Not Required checkbox to display both potential reasons why a pass-through entity may not need to complete the apportionment schedule. For pass-through entities either completely owned by Montana residents or doing 100% of their business within the state, we ask that you mark the 100% Montana activity box. And then for the pass-through entities without any Montana-specific activity, so if you're receiving only flow-through income, we ask that you mark the 0% Montana activity box. Near the top of page 2, we added a new line 21B, and this is for entities to report the Montana source portion of any income they moved from a prior period when utilizing Federal Form 8082. This is common for entities that don't receive their K-1s in time to file the prior year's tax return, or for those that undergo an administrative adjustment by the IRS. So when a partnership is the subject of one of these adjustments, it now must file a federal adjustment report with us within 90 days of receiving final word from the IRS. This report must include a copy of the federal determination, as well as an explanation of any expected changes to the partnership's Montana source income. If an amended return for Montana is necessary, then use 21B to report the changes in income. Then we entirely reconfigured the Form PTE Schedule 2. So what was formerly a numbered list of all the previously available 19 credits, along with a box to report the amount of each credit, Schedule 2 now is presented as a blank slate, where a pass-through entity can simply choose each credit it is claiming by entering its code as provided in the accompanying key, along with the corresponding authorization number, if applicable, and the amount of the credit claimed. So as part of the Schedule 2 reconfiguration, we also eliminated the credit recapture section. We made several small changes to the Montana Schedule K-1 as well. The first is the addition of a checkbox for special allocations found in Part 2. When distribution amounts don't correspond to the partner's profit and loss or capital ownership percentages, please mark this box. And then from Part 2, we moved the PTAGR checkbox down to Part 5. We also added here a checkbox to indicate if the recipient of the K-1 is a domestic second-tier pass-through entity. And finally, Part 6 of the Montana K-1 now resembles the updated PTE Schedule 2, which I just discussed, so that tax credits codes, authorization numbers, and amounts may be input here in the same manner as on the new Schedule 2. And that's all I have for you today, and I'll turn it back over to Rachel for a few other updates we have for you.
Thanks, Adam. So we just wanted to share a few other updates from the department with you today. First is that our withholding tables have been updated for the first time since 2004 to take into account the increase in inflation. And our new withholding guide with the updated withholding tables is out on our website. And we can include a link to that in the chat. We had one rule update over the last year, so an update to our administrative rules. We've extended the amount of time a taxpayer has to request an informal review to dispute an adjustment on a notice of assessment from the department, and the time that a taxpayer has to appeal the department's denial of an informal review to the Office of Dispute Resolution. So previously, taxpayers had 30 days to appeal an adjustment on their tax return. This has been increased to 45 days. And this is going to allow taxpayers more time to appeal a department audit or tax return adjustment. You can find more information on this change in the instructions to the Form APLS 101F, which taxpayers can use to file for an informal review. We've also simplified the tax certificate request process. So a little background on tax certificates. Taxpayers request tax certificates from the department when they need to dissolve their business, reinstate their business, or close their business with the Secretary of State, or if they just want a certificate from the department saying that they filed all of their required tax returns and paid all of their Montana taxes. Previously, taxpayers had to request a different tax certificate based on their need for the certificate. So for example, if a taxpayer was reinstating their business, they needed to request a certificate to reinstate, as well as a certificate to stating that they were in good standing. And both certificates really said the same thing. So that's why we tried to simplify the request process. So we've made it to where taxpayers only have to request one certificate, and we've also updated the form, and it's available on tap only now, which will allow us to process the tax certificate requests much more quickly. We did want to point out that there are taxpayers that don't have a filing requirement and that qualify for the elderly homeowner renter credit. They can file for that on tap, and they don't need an account or anything to sign up for TAP. They can just go on and directly file under our quick file section. So I just wanted to put in a plug for that. And then finally, we're going to be hosting a couple more webinars this month. Our next webinar is on Thursday, where we're going to talk about the elderly homeowner renter credit. And Adam's going to go over the legislative change to the credit, as well as how to complete the Form 2EC to claim the credit. And he'll also be joined with our taxpayer accounting unit manager. So that's going to be a great session for folks that are interested in learning about claiming the credit and how to file for the credit. So I hope you can join us. And then our next webinar after that is about income tax simplification, which is a law that was passed during the last session, the last legislative session, and that it goes into effect in tax year 2024 and for the 2025 filing season. The law change, we refer to it as income tax simplification, and it makes changes to Montana's filing statuses, the tax rates, Montana additions and subtractions, and it repeals several items that are used to calculate Montana taxable income. There are a lot of changes that are going to happen in tax year 2024, so we encourage you to attend that session to just get ahead of the curve. And then our communications team are going to be recording those webinars in addition to this one, and it'll be out on our website if you can't make it. So with that, I'm going to open up the floor for questions. All right. Okay, Matt. Let's see, Matt. Did you have some questions up for us, or?
Yeah, they're in the chat, but I've just been grabbing them, so I had them and make sure you guys got them.
Mm-hmm.
The first one, and you answered me in Teams. When can pre-approval be applied for? The answer was when the portal opens up, and I have that sitting in my chat. I never hit enter.
Yeah. So, and that's pre-approval for the SSO IEC credit. So, pre-approval occurs yeah, when the donation gets entered into the education donation portal by the person who's entering that information in from the SSO or the public school district. And then, of course, like I said, it's first come, first served basis. So, you know, it's also dependent on if it gets entered into the system on time.
And we will have buttons for that on our website homepage here pretty soon, letting everyone know as soon as that will be opening and when it will open and linking to it. MT form FTB will still be used in 2022 and then will no longer be used in 2023 since that's the first time the homebuyer savings account deduction is ending after 2022, correct?
So for the first time homebuyer savings account, yeah, so 2023 will be the last year to make any contributions. So that'd be the last year you would report any contributions or deposits into the account. You'll still need to, if you keep your account open, you'll still need to report on that form, I believe. With the first time homebuyer account, the money has to be, so you have to, within 10 years of opening an account, you have to buy or use the money for a down payment on a house. So the account can be open up to 10 years after that first deposit. So if you do make a deposit in 2023, you know, you'd have until 2033 to close the account.
Will there be any way to file individual tax returns electronically for free for 2022, regardless of income levels?
Unfortunately, not through our taxpayer access point, but we do have links on our website to the free file program, and the free file program, I believe, is something we partner with the IRS on. And so if there's like a free filing software, they can
we keep a list of Free File Alliance members. That's a program run by the IRS. They have offers specific restrictions. There are also some third-party vendors who may have free options available for you. And if you meet certain requirements for Quick File, then you would be able to use that. But we don't have a full Form 2 available on our transaction portal. As a non-CPA, how does a taxpayer determine whether to file a Montana return either jointly or individually when the majority of income falls upon one spouse?
Well, usually if you've got software, it makes things a lot easier, right? You can just kind of plug in your numbers and then toggle back and forth. But normally what we tell folks is if taxpayers, if joint filers, if one has, well, if they both have income and both of their income is more than the highest standard deduction and exemption rate, it's probably a good idea to file separately on the same form.
Is the Montana Medical Savings Account deduction going away after 2023?
Yes, so the deduction for the contributions going away. In 2024, folks will still be able to deduct the amount of interest on the account, but that interest has to be earned from contributions made before 2024. So if you're still contributing after 2024 and you wanted, you won't be able to deduct those contributions or any interest on the earnings from those contributions after 2024.
Is tribal income treated the same way?
Yeah, there are no changes to tribal income. You know, if it's earned on the reservation by a member of the reservation, it's still exempt, and that's federal law. So that won't change. We won't, you know, Montana can't change that.
When will the draft Form 2 and instructions be available? All of the forms will be available on our website on January 1st. When do contributions from Montana Medical Savings Account need to be removed?
I think well, the account can stay. I think what you mean is when do we need to remove all the funds from the account, maybe? So the account can stay open as long as you'd like. There's no sunset on the account, like the first-time home buyer account, which you have to use all the money up of the first-time home buyer's account within 10 years of the first deposit. With the MSA, there isn't any ending, I guess, to the account itself.
When does same as federal filing kick in?
So the same as federal filing, that would be under income tax simplification. And I believe you might be referencing like the filing status piece. And so, yeah, under the income tax simplification, beginning with tax year 2024, where Montana taxpayers have to follow the federal filing status.
When is Montana going to allow e-filing for Montana residents, MFS spouse not filing, if ever?
That would be a question, I think, for our e-services team. I'm not quite sure. And is that like a software limitation for a particular provider?
I would say that is an issue for the third-party software providers.
Yeah.
We as an agency do not currently offer any kind of tool for that at all. So, and I don't think there are any plans to change that. So that would be a question to ask your particular software provider. Can a client file MFJ on federal and still file MFS, same form, for 2022 through 2023?
Yes. Yeah, no change there.
Can you tell I'm so not an expert that I can't?
You're okay.
I would like to encourage anyone, if you want to have a deeper question and would like to unmute, you can go down to reactions and just raise your hand and I will ask you to unmute and let you come in and ask your question. Otherwise, I'm happy to keep reading them from the chat for you. Are 529 contributions still deductible until the beginning of 2024?
Yes, and after as well. So the 529 contributions did not, that deduction wasn't repealed with income tax simplification. So still at $3,000 per taxpayer.
What is the deposit limit amount that will be allowed for the deduction for Montana savings accounts for 2023?
That's $4,500.
Non-itemized for federal and itemized for state?
I think that means if you don't itemize federally, can you itemize on your state return? And yes, you can.
Will there be any deep dive webinars or seminars regarding these changes in the next year?
Yes, so we are going to have our income tax simplification webinar on actually next Tuesday. And in the PowerPoint, there's a link to where you can download the calendar event or whatever. And then we will most likely be covering it more, again, more in depth next year during annual updates time around this time next year. And it's also good to remember that our legislature convenes next month. So we'll probably, there probably will be even more changes for us to discuss. And I think that there are some items within the income tax simplification bill that they may be looking at to change or update, or who knows.
On behalf of the communications team, also, we find that this particular format has been very useful for a lot of people. So if you have questions that you think the department should do a webinar on, please reach out to us and we will hunt down business experts and see if we can make that happen. Do we have any other questions? Because it looks like I've caught up with chat. Thank you all for attending. This is being recorded. It will be available as soon as possible. I made the mistake last time of saying within 24 hours, and then Zoom took 3 days to process the video. So as soon as Zoom processes the video, we will make it available on our website at the same link that we used for logging into this meeting. So it'll be available at that link. The PDF copy of the presentation will also be available there, along with, I think I'll go ahead and link the withholding guide there too, since I shared that link in this chat. So
Thank you, Matt.
we'll have all that stuff in one place.
Great.
How do we find the link to the December 13th presentation? I will grab that for you real quick. It is in the upcoming events and due dates section of our homepage at nprevenue.gov. There is a link to a calendar event, but that is the direct link straight to that event. Did I just hear that 529 deduction is allowed for 2022?
Yes.
H&R Block does not have current tax software and no Form 2 or instructions are available. How can I determine if I have sent in enough to avoid a penalty without guessing?
I'm assuming.
Estimated tax payments?
Yeah, I'm assuming estimated payments. We do have our ESTI for tax year 22 on the website. So you can take a look at that. And that could help you there. Yeah. Thanks, Matt. Matt just put the link to that in the chat. All right. It looks like we're slowing down on questions. If we don't have any more questions, I'll go ahead and we'll sign off. We really appreciate everybody that attended today. This is the first time we've done something like this, so this is it's very great to have you all on, and then also to see all the nice comments in the chat. We really appreciate it. Keep an eye on our newsletter and our website for more of these webinars, and we hope to see you in one of our upcoming ones. Have a great rest of your day. Thank you.
And here is a link. If you're not subscribed to our newsletter, you can subscribe right there.